Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, March 5th through Friday, March 9th, 2012, and is sponsored by Realtic. All right, let's get right into the charts. This is a chart of the SPY, which mirrors the S&P 500 on a 10-minute time frame. We're looking back at the entire last week's session, and you can clearly see we opened on last Monday with a gap down. The markets once again recovered, and then the rest of the week was choppy sideways action. And overall, you basically had a flat week in the markets. But I think the key is to notice exactly what's going on. So far, we've had many attempts at the Dow closing over 13,000, and it has failed. Every single time it gets above, by the close, it closes back below. NASDAQ tested the 3,000 level as well, still has not closed above 3,000 as well. And again, part of the component on the NASDAQ, which is stalled out a little bit, is Apple Computer. AAPL, Apple Inc. here. If we go to the daily chart of Apple, you can see, it is up, but these last few days, here's a high on Wednesday. Thursday, it pulled back just a little bit off those highs again, and Friday, again, it closed basically on the flat line. So if this NASDAQ is going to get through 3,000, which it's about 24 points away from, you're going to need to see Apple break higher, probably to about the 555 to 560 area, at which point the NASDAQ has a chance of closing above 3,000. But again, one other thing I want to bring back up, which is on the SPY has gotten above the 137.20 level, which is the May 2nd, 2011 high, but you haven't confirmed, which is a proprietary signal here at InTheMoneyStocks.com. And I want to make it clear, the reason why this market hasn't pulled back yet. Many people have thought the market would pull back by now. Many people have, shorted the market over the last couple months, and really they've just been wrong. They've frankly been wrong. And I will say to you this one thing. The reason why the market has not pulled back is simply because a cycle date has not arrived yet. And us at InTheMoneyStocks.com, we have that cycle date. We are giving it out to our members. We are selecting the shorts appropriate for the cycle date, and we will make money on them. That's simple. If you want the cycle date, if you want to know when the market's going to fall, you take the 7-day free trial to the Research Center, 7-day free trial to the intraday stock chat. Research Center at InTheMoneyStocks.com is more for swing traders. Chat room, intraday stock chat is more for day traders. And again, want to know the beauty of this? I don't want to show you the beauty of this. Last week I gave out 2 shorts for our swing traders in the Research Center. Two shorts. What were they? Number 1, Caterpillar. Take a look at Caterpillar, guys. When did I short it? I shorted it right here. Why? Because there was a master level and a master signal on the charts being read by the proprietary signals here at InTheMoneyStocks.com. The shorting level, 116.05. The market basically last week went flat, right? What did Caterpillar do because we had a master short level? It came in all the way down to the 112-ish level. We're basically $3 to $4 in the money on this, and the market hasn't even pulled back yet. Now again, why? Because we have master techniques, master signals that alert us to short these things based on proprietary calculations. We give these out. We teach you them, in fact. All right? Now again, what was another short? I said I gave out 2. The other one was MasterCard. When did I short MasterCard? Well, if you go back to last Wednesday, I had a proprietary signal right here. The level was 427.75. I pulled the trigger on a short. I gave my members a timestamp signal at that exact time on the Hot Charts and Alerts, which is part of the Research Center, to go short MasterCard. Since that short call, even with the market flat, look at MasterCard. It's down $15. I repeat, $15 fall. So again, you have to know, especially if you're going to short and the cycle date isn't here yet. Now, once the cycle date comes, you're going to be able to short almost anything and it's all going to go down because the markets are going to collapse back down a little bit. But the key is if you're going to short before a cycle date, you must know the exact levels to do so on specific charts. And this coming week, folks, I will be giving out another 1 to 2 shorts, which I will be taking myself at master levels as we continue to inch closer to that cycle date. All right? This is how it's done. This is how the elite do it here at InTheMoneyStocks.com. We have created this methodology. We will teach it to you. Assuming you are willing to learn, we will give you our swing trades as we take them. You can piggyback off them, but we also want you to learn the techniques and learn the proprietary signals so you can do it on your own. All right, let's go to a couple other things here, folks. Going back to the SPY. SPY hovering just a shade above that May 2nd, 2011 high. Again, looks like a little bit of a rounded top here, but there's no signal yet that we are going to pull back dramatically. I'm looking at Greece. I'm looking at Spain. Spain, very interestingly enough, towards the end of last week, and this caused the dollar to run up, said that they are not going to be able to meet their debt cuts or their spending cuts that they had promised to based on the last year's bailout. And I think that is a significant signal because, again, they're going to need another bailout. And if they're not even meeting the first requirements, how are they going to meet the second requirements? And the same thing goes for Portugal and Italy and Ireland and the rest of these. I think that's a very important aspect. So that's something I'm watching very closely. And actually, you can see the dollar really popped up. And remember, dollar and markets generally go inverse. And here the dollar, again, Wednesday, huge move up. Thursday, pause day. Friday, nice move up as well. We'll see if we come up to this pivot high here at around the 22.30 level on the UUP, which is the dollar ETF, and whether or not we stall there or break out. You break out, you're going all the way up here on the dollar, and the markets will collapse on that. Now, if you can't and you stall out and start to pull back, the markets can still stay up. My guess is it all coincides with the cycle date that's coming up. And again, we will be giving that out, folks. You will be able to short almost anything when that cycle day comes. If you want to short before then, you must choose the specific master levels on certain charts. I have one that I'm going to release as a warning signal or as a watch for a key level to be hit on IBM tonight. If you want to know that level, you take the 7-day free trial here at InTheMoneyStocks.com and you get involved. All right, let's go over a couple of the charts here. I want to take a look at Google. GOOG here continues to be above these two trend lines. This is actually a bullish chart, although it's a little extended for my likings, but if it consolidates a little bit more, this chart actually could go higher. Your easy shorting no-brainer level is right here at the 640-ish level. Guess the 640 is going to be dead on short. Another stock I'm watching, Amazon. Amazon continues to hover above this trend line right here, which is your master trend line. All right, when Amazon closes below this line I just drew in, it will go very quickly all the way back to this pivot double bottom, if not lower. That's at the 167 level. So it'll go to 167 as soon as it closes below this line. On a closing day, though, it has to close the day below that line. Can't be intraday. All right, a lot of people don't understand that, and I'm here to make sure you guys do understand that. All right, JP Morgan. JP Morgan had a nice week. I would say of all the sectors last week, the financials really had the best week overall. They actually had the best charts. They're the only charts going into last week that I actually liked. And the reason is, I mean, if you take a look at the Morgan Stanley chart, really it had a long basic consolidation. Really from this point on, from this little pivot high, even going back to here, you can see this is a long base choppy consolidation, building pressure with all moving averages sloping up underneath now. Bam, breaks out to the upside. If we take a look at Goldman Sachs, same thing. Goldman from this point here, this was a beautiful consolidation pattern right there. Staying above the 20, right above the 200 with the 50 sloping up underneath, blast off. All right, very, very nice chart there. And these were really the only bullish charts out there in my opinion. There are other charts that went higher, but they were just too extended to even contemplate thinking about in terms of a bullish move. But the financials, again, had their move. I wouldn't be surprised if they have a little bit more fuel in the tank as we approach the turn. But once the turn hits, even these stocks will pull back dramatically. All right. What else do we want to take a look at? I think it's wise to take a look at Copper's ETF. Copper ETF is holding above these moving averages. A little bit of bullish consolidation. But again, the question is, can it stay above? If it starts to break down and it can't break out above this pivot high, this is your pivot high right here. If you can't take that out, it's in a lot of trouble on the JJC, which is the Copper ETF. All right, now let's take a look at a couple other things, folks. A couple other stocks. ExxonMobil, good pullback towards the end of the week on Exxon, kissing the 20 moving average, bounced off of that. What you're looking for on Exxon is very simple. You have a trend line down here. Take these lows and just connect it right through, which also happens to match up. You can see, take this pivot low, it connects to here, to here, to here, to here, and then to here, which is also the 20 and the 50 moving average. If you close below this area here, you will be in a breakdown mode, and you will see Exxon drop sharply to the downside. All right? Now, as long as it stays above here, it could go higher. But this is your break point right there. Chevron, let's take a look at Chevron. Chevron essentially kissed a double top right here. Beautiful little kiss of a double top on the charts, stalling out. But again, same thing applies. If you take this pivot low, look at this. All right here. Connected here, connected here, connected here. That's your trend line. You can see it actually has to break through those two moving averages and then that trend line. This chart's a little bit more bullish, in my opinion, than the Exxon chart, although it did hit a double top high right there and obviously pulled back beautifully off of that. Taking a look at a couple other charts, how's IBM? I said I'd put out an alert on IBM. IBM bullish consolidation. This very well could go a little bit higher. The key is based on a key time count now you're watching, and then you watch the master proprietary level, which I will give out to the Research Center tonight in a post on the Hot Charts and Alerts. And again, that's part of the Research Center 7-day free trial here at InTheMoneyStocks.com to the Research Center as well as the intraday stock chat. All right, taking a look at a couple other charts here. Let's take a look at Broadcom. I haven't looked at Broadcom in a while. Broadcom's chart is not a healthy chart. Sharp down move here in spirit of bearish consolidation, breaking further. I would say this is heading down towards this level in the not too distant future. Broadcom not a good chart at all. Take a look at FFIV. How's FFIV doing? FFIV not bad. It's a little too extended to be a long at this range, but I don't know if it's a short yet because it hasn't really confirmed or closed dramatically and broken down below the 20. Once it does, it should go very quickly, but at this point, it's more of a neutral ranking to me. How's Netflix doing? NFLX. NFLX don't like the chart much. Bearish consolidation below here, although you have the 50 below and the 20 just above here. But again, bearish consolidation. Wouldn't be surprised to see that dip into that level. Maybe even go a little bit lower to gap fill. That would be somewhat intriguing to me if it got down to gap fill on Netflix. Definitely a little on the intriguing side. What else do we want to take a look at? Let's look at one or two more charts out there. How about Baidu, BIDU, which is a Chinese play, Chinese stock here going for a double top. There's going to be good resistance at that double top if it gets there. If it gets through that pivot point, then you're looking at this as your next major level on the chart right there. And then ultimately, you can see another level here. And then obviously the double top all the way up here if it continues to run. I'm not that bullish on this chart. Short term, it's gotten very extended from these lows here. But it could go a little bit higher. I'd probably look to short it up here if it gets up to this little pivot point at the top for a pullback. This one is not far enough extended, hasn't pulled off enough and had enough time to really be a firm enough level, I would say, at this point. It's more of a minor resistance right here. Major would be up at this range. All right? So that's what we're seeing on those charts, guys. Again, the key is it's all about proprietary methodology at this point. I mean, that's all I can say, folks. That's why Caterpillar, we shorted last week, we're in the money beautifully on that. MasterCard, you see how we're selecting the specific charts that we want to based on proprietary signals, and they're actually working, even though the market's not going down. And again, once the market starts going down, those are just going to even be more in the money. But it's all about being patient and waiting for the right setups and waiting for the proprietary calculations to say it's a short. Once that happens, once we give out the cycle date, the money will flow even faster. Come to InTheMoneyStocks.com, join the elite pros. We will teach you all we know. We will show you. We will give you our trades. I don't care if you're an investor using a 401k, an IRA, or investment account, a day trading account. We will help you out here and make you into the next basic hedge fund manager based on how good you're going to perform, in our opinion. You learn this methodology, there's nothing you can't do. Alrighty, guys, take care again. Have a great rest of the weekend. Come join us here at InTheMoneyStocks.com, utilizing that 7-day free trial. Try us out. Watch us succeed. Watch yourself make money. Be a member for life. Take care.